Imagine stepping into a world where your financial future isn't just a dream, but a tangible reality waiting to be grasped. In this captivating journey with CashOps, we're not just exploring the surface of investing, we're delving deep into the art of making money work tirelessly for you, just as the most affluent individuals on the planet do. The secret is simpler than you think, and it all starts with understanding and strategically navigating the investment landscape. Contrary to the flashy allure of overnight riches through the speculative trading of the latest cryptocurrency craze, the real key to unlocking your financial potential lies in the foundational principles of investing. And here's the twist. Investing isn't a one-size-fits-all solution. Depending on your current financial situation, the path you take can vary dramatically. For those with less than $11,000 to their name, the conventional wisdom of stock or crypto investments might not be the golden ticket. Surprising, right? Instead, the focus should shift towards leveraging high ROI opportunities that you can directly influence. This is about investing in yourself, your skills, and your capabilities. The only investment that truly offers control over the outcomes. Let's break down the concept of investing. At its core, investing is the act of allocating resources, usually money, with the exception of generating an income or profit. You're essentially planting seeds today with the belief that they will bloom into more prosperous tomorrow. And while the concept might sound straightforward, the execution requires insight, strategy, and a keen understanding of your financial standing. The investment journey can be segmented into 5 distinct stages, each with its own strategies and focus areas. From the initial phase, where the goal is to amplify your earning potential through skill development, to the pinnacle of financial wisdom, where wealth preservation becomes paramount. Each stage is a crucial step on the ladder to financial independence, and understanding where you stand is the first step towards crafting a tailored investment plan. If you're finding value in this exploration of financial growth and strategies, remember to subscribe to CashOps. Our commitment to you is to equip you with the knowledge and insights needed to navigate your financial journey successfully. Now let's take a look at these strategies. For beginners with limited capital, the emphasis should be on skill acquisition and growth. This approach is about maximizing your return on investment on your most valuable asset, yourself. As you transition through the stages, the strategies evolve, focusing on building a robust investment portfolio, diversifying into stocks, bonds, and perhaps even dabbling in cryptocurrencies when the time is right. Investing isn't just about pouring money into assets, it's about creating a disciplined, strategic approach that aligns with your financial goals and risk tolerance. It involves understanding the power of compound interest, the significance of building an emergency fund, and the importance of consistency over chasing market highs. As we journey through these stages, it's crucial to remain grounded, focusing on long-term growth rather than sidetracked by the allure of quick gains. Remember, the most successful investors are those who are patient, disciplined, and strategic about their choices. Continuing our journey, the path to financial freedom is a journey of learning, growth, and strategic planning. It's about understanding where you are, where you want to be, and how to navigate the path between those points with wisdom and insight. And remember, it's never too late to start investing in your future. Next, it's vital to emphasize the significance of adapting your strategy as you transition through these different stages of financial growth. Investing wisely requires a blend of knowledge, patience, and the courage to sometimes swim against the current of popular trends. It's about making informed decisions that align with your long-term goals and financial health. As we delve deeper, let's explore the nuances of these investment stages with a keen eye on sustainable growth. Beginning your investment journey might feel daunting, especially when the stakes are your hard-earned money. However, Understanding that investment is not a gamble, but a strategic game of chess can change your perspective. The initial steps involve educating yourself on financial markets, understanding the risk involved, and gradually building a diversified portfolio that can withstand market volatility. For those in the early stages of their investment journey, focusing on acquiring assets that offer both learning and earning potential is crucial. This could mean investing in courses that enhance your professional skills, attending workshops that expand your knowledge base, or even starting a side hustle that could turn into a significant income stream down the line. The aim here is to create multiple revenue streams that not only increase your financial security, but also give you the freedom to explore more aggressive investment options in the future. As you advance in your investment journey, the focus shifts towards maximizing returns while managing risk effectively. This is where the concept of asset allocation comes into play. It's not just about picking winners in the stock market or finding the next big crypto. It's about how you distribute your investments across different asset classes to mitigate risk and maximize your returns. A well-diversified portfolio includes a mix of stocks, bonds, real estate, and potentially even some alternative investments like commodities or private equity, depending on your risk tolerance and investment horizon. Remember, the goal of investing is not merely to accumulate wealth, but to ensure that your wealth works for you. Generating passive income streams that can support your lifestyle and financial goals in the long run is key here. This means regularly reviewing and adjusting your investment strategy to reflect changes in your financial situation, the market conditions, and your personal goals. Midway through our investment journey, it's also crucial to stay informed about global economic trends and how they can impact your investments. This doesn't mean reacting to every market fluctuation, but having a solid understanding of how economic indicators like inflation rates, interest rates, and geopolitical events can affect your investment portfolio is crucial. Staying informed enables you to make proactive adjustments to your strategy, ensuring that you're not just passively watching your investments, but actively managing them to align with your financial objectives. As you continue to grow and evolve in your financial journey, the importance of patience and consistency cannot be overstated. Wealth accumulation is a marathon, it's not a sprint. It requires discipline, a long-term perspective, and the resilience to stay the course, even during market downturns. Remember, every investor's journey is unique, and there's no one-size-fits-all strategy that guarantees success. In wrapping up, let's not forget that the essence of investing lies in the power of compounding, the ability of your investments to generate earnings, which are then reinvested to generate their own earnings. This is the magical formula that can transform modest savings into significant wealth over time. Navigating further into the intricacies of investing, it's crucial to highlight the transformative power of consistency. The most successful investors aren't necessarily those who strike gold on a single investment, but those who commit to a disciplined strategy over time. Remember when we said investing is a marathon and not a sprint? That's what we're saying here. The same principle applies. This persistence is what differentiates a fleeting success from enduring financial stability. In this light, consider the concept of financial resilience. This is the ability to withstand economic downturns without derailing your long-term goals. Building such resilience not only requires diversification and strategic asset allocation, but also an emergency fund that acts as a financial buffer. This will ensure that you're not forced to liquidate investments at an inopportune time, should unexpected expenses arise. The peace of mind that comes from having this safety net cannot be overstated. Moreover, as you become more adept in your investment journey, the importance of reinvestment comes to the fore. Reinvesting dividends and interest income can significantly accelerate the growth of your portfolio. This act of compounding returns over time is akin to planting a forest from a single seed. The initial growth may seem slow, but with patience and time, the growth becomes exponentially larger. It's also worth noting the psychological aspect of investing. The emotional roller coaster of watching the market's ups and downs can be overwhelming for many. Cultivating a mindset that remains unshaken by short-term volatility is essential. This involves focusing on your long-term objectives and trusting in the investment plan you've set. Remember, the journey to financial independence is as much as about managing your emotions as it is about managing your money. In conclusion, the path to financial prosperity is multifaceted, involving a mix of strategic planning, patience, and emotional fortitude. And as you forge ahead, keep educating yourself, stay adaptable, and remember the power of community. Engaging with a community of like-minded investors can provide support, insight, encouragement as you pursue your financial goals. Thank you for embarking on this journey with CashOps. If you found this guide insightful, please like, subscribe, and share with others who might benefit. Here's to building a future of financial freedom and success. Remember, the best time to start investing was yesterday. The next best time is today.